depreciation account, 30,000 rupees. Any adjustments are remaining? No, that's it. So all adjustments are already recorded in the respected accounts. Now we will close one by one accounts. First we are trying to close this account. It looks like a debit is higher and the amount is very close to 2,30,000. It's 230 only, and it's square off. Fixed assets account is tallied in both the sides. Now see, the another account is accumulated depreciation, and that is also square off, no balance at all. Now we'll try. First we'll need to find out any more items are remaining in adjusted profit and loss account. So far we just have to identify anything else is remaining. From the balance sheet, share capital, retained earnings, accumulated depreciation, 12% debentures, creditors, bank, prepaid expenses, debtors, inventory cost. No, nothing is remaining. So close this account and find out the balance, and that is comes to, the total is 1,07,300, and the remaining amount, its balance would be considered, it's around 37,050. Let's confirm that 37,050 it's right by adjusted profit. Here from the profit and loss adjustments accounts, we got a profit of certain amounts, that is 37,050. We make a star over here. This would be considered as a source, and that's why the question of cash flow statements begin from this part. Alright, then we will actually identify all the things. We have certain things which we are going to mark it here. One is adjusted profit, that is 37,050. Then we have another item, that is purchase of fixed assets, and that is 78,000. Anything else is remaining? So far is considered, yes, dividend paid. Dividend paid is also going to record in cash flow statement, and that is 12,000. That's it. These are the three entries would be recorded in the cash flow statement. Now we'll prepare cash flow statement. So after the preparing of the necessary ledger accounts and the adjusted profit and loss account, we identified the few entries which are going to record in cash flow statement. Let's begin to prepare a cash flow statement. We are preparing a cash flow statement for the year ended 31st December 2009. So cash flow statement for the year ended 31st December 2009, and that is prepared as per AS3. Now the important part of this concern is the questions is actually divided into a three part. This answer would be divided into a three part, and the first part is find out the changes regarding the operational activity. So it's begin with the first item, that is the amount of changes, that is cash flow from operating activity. Cash flow from operating activities, and under this operating activities the question begins with the adjusted profit, and adjusted profit which we will find out in adjusted profit, adjustment profit and loss account. So adjusted profit is 37,050. Adjusted profit from the adjusted P&L account is 37,050, and which is after depreciation and non-cash items. Now in this profit we will identify the changes of working capital. So add and less changes in working capital. So for that, just refer in your question and identify the first current assets and current liabilities. Let's begin with the current assets first. So in the question current assets, we have fixed assets cost inventory. So inventory, it's your first current assets, and that inventory, it shows decrease. Current year current assets is lower than the last year, it means it decrease. In case of the current assets is decrease, it's always a benefit, and benefit is always recorded positive, add, and the difference amount of the inventory, it comes to around 4,200 rupees. Let's confirm that 4,200 rupees, it's a difference amount. That's right. So now after that, the next is debtors. The debtors is also, if you are going to see, it is also decrease, so that is also positive. Debtors, it's also decrease, and the difference amount of debtors, it comes to, that is very close to 9,700 something. Yes, it is 9,700. So the amount of debtors change, decrease, it's 9,700. This is also decreased, though it means the formula again, it's the same way applied. The current year current assets is lower than the last year, that means it's increase your cash flow, it's improve your cash flow, and that is a positive value. So it would be added into the adjusted profit. Now next current assets is prepaid expenses. Prepaid expenses is actually shows 3,950 and 3,000, that means it's also decrease. So prepaid expenses also decreases by 950 rupees. So it shows changes of 950 rupees decrease, but ultimately your cash flow is increasing, and that's why it's a positive value would be added into profit. The next assets is bank. Bank balance is only balance that would be considered at a last item of this cash flow statement. Now current liability, first is share capital, it's not current liability. Retained earnings is already recorded in adjusted P&L account. Accumulated depreciation, we already prepared an account and we find out the differences, which is already recorded. 12% debentures directly recorded under this financing activity. Creditors is only liability and current liability, it is given. But here if you are going to see, the creditors is increase. In case of the creditors is increase, it is always considered the part of cash inflow. So creditors increase is also positive, and let's find out the difference value. The difference value of the creditors is comes to 20,000. Yes, it is 20,000 rupees creditors increase. That's it. These are the changes in working capital. Let's find out the changes in net value. All are positive values. So 20, 29, 33, 34 and 34,850 or something. Let's see, confirm. Yes, it is 34,850 would be added to the adjusted profit, and then it comes to 71,900 rupees. So the total amount of changes, it comes to 71,900, and that is cash flow from operating activities. But this is still not net cash flow from operating activities, because of we have a tax paid or something that we need to confirm it. So let's see the adjustments. Is there any amount of tax paid during the year which is given? No, we don't have any transactions regarding the tax paid. So tax paid is almost nil. If you want to write to show it, you can write it like this: tax paid, and the amount is nil. So your answer 71,900A, that is net cash flow from operating activities. Net cash flow from operating activities, that is your answer A. Now moving to the next part, that is cash flow from investing activity. Cash flow from investing activities, and for that we need to identify the changes of your fixed assets and investments. So refer the question. Not only refer the question, but we'll just find out any changes are there in the investments. Yes, we have a purchase of fixed assets, so why should not start with this only? Let's begin with this item: purchase of fixed assets, it is purchase of fixed asset, it means cash goes out. Okay. Assets comes in but cash goes out, so cash outflow. In case of cash outflow, that means it's actually reducing your cash flow, and that's why this would be that negative value 78,000 rupees into bracket. I told you in the earlier problem also, if it is a negative value, it should be always written in the bracket. Now refer the any other assets are there which are directly comes from the balance sheet, because of from adjustments there is only one item regarding the investments, but maybe there are certain other items from the balance sheet or any other sources. Fixed assets, it is already recorded. Inventory, it is current assets, debtors, prepaid, bang. That's it. We don't have any more assets which are actually considered under this activity. So it's only one item, 78,000, and that 78,000 rupees minus your answer B, and that is net cash flow from investing activity. So net cash flow from investing activity, that is your second answer. Moving to the next point, that is cash flow from financing activity. And financing activity is to be identified from the changes of capital structure. So if there would be any more capital issued, or say capital issued or redeemed, as well as any amount of bank loan taken and repaid, would be considered here under this activity. Not even that, dividend paid and interest paid is also to be considered under the same activity. We have anything is here to be considered directly under this activity? No, not at all right now. Dividend paid is there, but that we will consider after some time. Let's find out first any changes in the capital. First item in the balance sheet liability side, your share capital last year is 1 lakh and the current year is 1,60,000. That means during the year company issued share capital. So your first item is issue share capital, 60,000 rupees. So cash comes in, that is your positive value. Cash comes in, that means the cash inflow, and cash inflow it means your positive item, and that is recorded under this category. Now see, retained earnings would not be considered here because of its profit and loss account information. Accumulated depreciation is also not to be considered. 12% debentures, that is your second item. Last year 12% debentures is 50,000, current year is 0. It means that during the year they redeemed the debentures, so debenture value has been repaid. If it is repaid, that means the value of debentures are gone. Cash goes out. So cash outflow, ultimately it's reduced. So redemption of debentures, it's your negative value, and that is to be written in the bracket. 50,000 rupees repaid, cash outflow is impacted, value of cash inflow has been reduced. Then we'll find out the changes of third item, and that is dividend paid. In dividend paid also the cash goes out, so that is also negative 12,000 rupees as per the marking which we made it here. 12,000 rupees cash outflow is considered under this category. So 12,000 rupees dividend paid. 3 items are there, that's it. Now we'll identify the changes of this. 60,000 rupees positive, but 62,000 rupees is negative. So ultimately your final answer under this activity is 2,000 rupees negative minus, and that is your answer C, net cash flow from financing activity, and this is your answer C. So that means there are 3 answers. Answer A, that is changes in operating activity, that is here 71,900 rupees, it's positive. Then the net cash flow from investing activity 78,000 rupees, and the net cash flow 2,000 rupees, that is your minus answer. Now again we need to find out the changes of that. We'll have to do it the simple thing. I'll just rub it here, the first part, so I can find out your net answer. Just concentrate, because of this would be continue here. Now here is 3 activities answer, so we will find out the net cash flow or net changes of cash flow from all activities A plus B plus C. See here, A is 71,000 plus 71,900, B is 78,000 minus, and C is 2,000 minus. So total minus is 80,000, but plus is 71,900. So if you are going to see, 80,000 is minus and 71,900 is plus. So your answer would be negative, and that is 8,100. So your net cash flow from all activities is 8,100 rupees minus. Now, net cash flow from all activities we received, but now we want to confirm whether the opening cash and bank balance, when you add in this, your answer would be tallied or not. Let's see your question and tell me the opening cash balance. Your opening cash balance is not given, but opening bank balance is given. So opening bank balance is 28,100. So 28,100, it's your opening cash balance, bank balance, sorry. And after 28,100, this is positive. 8,100 is negative. So minus this, what would be your closing balance? Your closing balance is positive 20,000. Just confirm whether your bank balance, yes, it is. Your closing bank balance is 20,000. We don't have a cash balance, we have only bank balance. Opening is 28,100. This would be compared with your changes in all activities, that 8,100 is minus. So 8,100 minus deducted from your opening balance, your closing is 20,000, and that is tallied as per your cash flow statement accounting standard 3. So this is all about the changes of cash flow from all the different activities, and we can determine and identify from where the cash comes in the business and for which object the cash goes out from the business.